Hey guys, how you doing? It's Mike over here. I wanted to show you guys my high growth portfolio. Last week I made a video showing that my portfolio was at $28,000. I wanted to make this video because it's Friday and just wanted to show you my weekly portfolio update and how a high growth investing portfolio fares against other portfolios or maybe your portfolio. So just want to show you guys how it's doing. Um, Right now we're at $33,421.63. If you look at my gain, I'm at $6,000, which is pretty crazy because just last week, I was at $28,000 and it just kept skyrocketing. And with everything going on, like I wasn't anticipating the market to be recovering this quickly, which, kind of begs to differ, like, what, is there going to be like a rebound drop? Um, so got to be really careful in these kind of territories. But I mean, it's not like you change the game plan. So just kind of showing how the portfolio fared. At some time like February 27th, or probably starting like what was that? February 19th, the market started dropping because of the virus that was going on. And there was a little recovery, and then it just kept dropping and dropping. And then ultimately, at some point in April 1st, the market just completely recovered and is starting to get more gains. So I just want to show you guys how my three holdings are doing compared to whatever you guys have. So just want to show you guys what that looked like. So we're going to go to our holdings tab and show our actual return, because even though it says 46% return here, that's not the actual return. So when you go to holdings, that's where your best return is going to be. So I mean, I'm pretty ecstatic that the stocks are doing what they're doing right now, but there's that doubt in the back of my head saying, you know what, like, is this real or is this fake? 17 million people lost their jobs in the month of March alone, and that number's still rising, and people aren't being able to pay their bills, and the market is just still going up and up. So I'm just kind of a little concerned, thinking that, is this legit or is it not? So that's not going to change my plan. Like, I'm a long-term investor, and going forward, I'm not going to switch my game plan. But I mean, I'm just thinking that, is this legit or not? So just going over my portfolio. So I do hold three positions. My total cost basis put money in was $26,801.66. My current value is $33,394, and then my unrealized gain is $6,592, which will put me at a 24.6% return. So let's talk about our biggest winner. Our biggest winner over here is Tesla. Tesla is at a 67% return since I bought it. My average price that I bought it for was $451 a share, and it just went up 67.25% ever since I bought that. Tesla is one of those companies, like, my entire investing philosophy is investing in technology and innovation, and this is exactly what that is. Like, Tesla is not only an automotive company, but it's also a storage company, a technology company, and people are starting to see the value of this. And again, come Monday when the stock market opens, all of this can drop. But Tesla has been undervalued for quite some time, and they're just churning out gigafactories, and they're churning out Tesla cars, and they're put in a competitive advantage compared to other legacy automakers, because most of their sales are not at dealerships. You don't have to go to a dealership to buy their vehicles. You can go on the internet, and for the most part, it'll be delivered to your house. A lot of dealerships do not offer that. So even though car sales are declining, they're still fulfilling orders that were backlogged. So they're still producing a decent amount of cars. They should still be having revenue. Some of their factories did close down because of the virus, but for the most part, when the dust settles, like, this is one of those companies that's going to be um, being further ahead. Then my other two holdings that I have, which is the QQQ and then the ARKK. Let's talk about the QQQ. Again, my investing philosophy is innovation technology. QQQ, 47% of their holdings are in information technology, and I'm at a 16.27% gain for that. Hold 81 shares. And again, the stock market it's been going up and up and up, and this is just a reflection of that. So if the majority of the market's going up, then also the QQQ will also be going up. And the last thing that I'm investing in is ARKK. This is that innovation actively managed ETF, and we're up 11.82%. So for the most part, this is how we're doing right now. I really, I'm happy that the market has recovered, but the economy isn't necessarily fully recovered yet. Like, I would like to see people working again and putting that money in the economy. So I'm a skeptic about this number here, which again, at the same time too, my overall plan is to invest in innovation technology, and then to do so, I'm investing $125 every single week. So basically, the plan doesn't change. The volatility has been crazy, and I'm not too concerned about volatility. Like, people like panic when volatility happens, and you start selling their shares, and ultimately, like, if they would just kept, they would have had a much higher return. And there was a research study that said that if the best investors are actually dead because they don't touch their money. So a lot of people, it's you got to have a strong stomach to be investing and being able to take volatility. Like, I have no problems dealing with volatility. Like, my job in itself is very stressful. So to me, watching these numbers go up and down is really not a big problem. But not everyone can handle that kind of volatility. And you can tell I don't have any bonds. I don't. It's not a belief that I don't invest in bonds. It's just that I have a long-term horizon to invest. So maybe if I'm close to retirement, I'll invest in bonds. But right now, my big thing right now is I just want to get the highest return. So let's talk about my game plan. So I'm putting $125 every single week, and I'm going to show you guys. I'm just going to show that that's how much money I'm putting in every single week. You will also notice on the deposits is that there's certain extra monies that I put in here. That's because whenever I have any extra money after all my expenses are paid and put into the correct fund, so me and my girlfriend, we both we have like a certain limit that we spend on our credit card. Then we have money we put away into an emergency fund. We have a travel fund, and we have a wedding fund, because eventually we're going to get married. And once all those check marks are filled in, and whatever's left over is the extra money that I can put away into this account. So if you look, let's talk about the consistency that I put into. So every single week I'm putting away $125, and that's how I'm going to be growing my nest egg. Like, that $33,000, every single week there's going to be $125 added to it. So basically every single year will be $6,000 worth of money that is mechanically put in all the time. Like, when investing, you need to be a mechanical investor. You can't be a psychological investor. If you're a psychological investor, you are going to lose. So you can tell every single week, $125. In this point, I did make a decision. I did have some money in my savings account that I decided, what, the market is down. I'm not going to toss everything in there. I'm just going to put in a little extra money just to see if I can buy some things on sale, which I did, which ultimately led to, the gain that I have. And again, just every single week, just $125, you can see. And this is all for January. So every single week I'm putting the $125. And again, if I do that consistently over the next 40 years, like, there's going to be a nice chunk of money there when I retire. And then ultimately, like, my game plan will probably be, is like, once I get my money, maybe switch those into dividend ETFs or dividend stocks, which in my Roth, that's what it is. But like right now, like, we're not going to talk about the Roth in this video. So again, I'm just putting all these $125 every single week plus whatever extra. So yeah, so let's actually look at the funding history. So like, how much money have I put in over time? So the first year that I started putting money in was late in 2018, once I finished paying off my student loans. Once I finished paying off my student loans, I had a nice chunk of change, that nice amount of money that I can keep putting away. At that time, I was still living with my parents, and I was trying to be smart with my money, paying off my loans as aggressively as possible. And just the feeling of paying off the student loans was absolutely, it's second to none. It just felt like I didn't owe anybody anything, and that all the money I make isn't to pay student loans off. It just feels good. And then the extra money I make can actually make me more money. So I paid them off late 2018, and then you can tell in 2019 I was really tossing money into this. And I was picking up a lot of overtime. I didn't have student loans. I haven't started living with my girlfriend until December of that year. So basically, I was just putting in away a lot of money. And then you guys noticed that I pulled out $6,000. When I pulled this $6,000 out, it was to fund my Roth IRA. I decided that, you know, it's important to have a typical brokerage account, but I think it was more important to have a Roth IRA. The reason that I wanted to put my money into this Roth IRA is because you put your tax money into it, and whatever money you make off of it, it's untaxed. So if you have 20, $30 million in there, you pull all that out, you get taxed nothing. If you can somehow get that return, which again is almost impossible. But, you know, you got to try somehow. So you're going to put some money in. So then you notice on this portfolio, there's a little drop right here. That's exactly when I pulled it out. And then so far this year, it's April 17th right now when I'm making this video, and I've already put in $7,375. So far this is all the money I've put into this account. And yeah, so again, you know, just going forward, the plan is to keep putting away that $125 a week to keep growing this bad boy. And you know, the way I'm doing is by investing in growth stock or growth ETFs as well as the growth stock. And then with my investing philosophy is to invest in innovation and technology, as well as just being a mechanical investor where you're just putting that money away every single week, just $125. You know, we spend a lot of money on a lot of stupid stuff, and it's a shame that a lot more people don't do this, because this is securing your future. You know, I'm not going to be relying on the government in the next 40 years to give me retirement, because Social Security is going to run out. You know, I'm paying all these taxes to pay for people's Social Security now that I'm not going to get, and so you just cannot rely on the government to be able to feed you when you're older and retired. So this is kind of the plan. You know, I'm glad you guys took the time out of your day to watch just my portfolio update. Really appreciate it. It means a lot to me. If you guys can, please leave a comment, like, subscribe. I really appreciate that. And like, I really love showing you guys like different investing styles. So please just, you know, if you guys have any comments, please leave something there. Like, it really means a lot. I love answering questions, so just hit me with them. And so yeah, you know, if I just had to sum everything up, you know, portfolio is going up. I'm kind of concerned that the market is going up with all the terrible economic indicators that are going on right now. But you know, it looks like so far my portfolio is doing okay. And you know, we'll kind of go from there. And so just, you know, keep mechanically investing, keep looking for those higher return stocks and ETFs, and you know, hopefully we can secure our family's future. So, you know, you guys have a good one. Appreciate the time, and you guys have a good one.